Oh, ladies and gentlemen of the crypto space, we're live on a Friday, November 18th at 11:31 a.m. I share with you guys what I do for me and my family, and I'm inclined to think it has helped more people and hasn't hurt anyone. This is the point of the conversation, to remain rational, to make the best choices possible. And to do that, we need to understand where we are and where we're heading. Where we are, I think everyone has a decent sense of where we are. Fear is pervasive, risk is everywhere. This is not an up only system. This is not where capital is being made. This is where capital is being earned, but it's going to be few and far between that are offering the potential to earn. It has to be productive enterprise that, at least has a stable user base, hopefully a growing user base, and that would be growth. But this is an environment where growth is very much absent. So I've said it before, and I will continue to reiterate. This is obviously a period of austerity, extreme austerity, and we should expect that to continue. And the appropriate mentality to have, the appropriate base case to have, is to be grateful for the quantity of dollars that you have. And that may be very disappointing, especially considering the exuberance many of us have experienced over the last decade at, you know, transient periods of time. But 2020 to 2021 was obviously an extreme period of exuberance. That's gone. That's been gone for a long time now. And we were clinging to that exuberance, that expectation, or that hope for that process to continue occurring such that we continue to make gains. But that's gone. And now we're at the point where it must be digested that there is zero expectation for outsized returns. You're not making 10x's left and right, because that is exactly what we experienced. Now, obviously, if you're into the TA and trading and perps and swaps and all that, fast action type of gambling, there's plenty of people that make a fair amount of money. But this is not the topic of conversation that I like to discuss. It's not the mentality that I like to have and how I approach financial management. I'm a strategic positioner. I play roulette. But that's is a very short-sighted way to express what we do. We place chips on the table uh, where we expect things to land, and that's I would like to say, which I've said before, that trading is like throwing quarters at a train track. Hoping for the train to hit the quarter. Whereas I'm more like, I'm going to put quarters on the train track and I'm going to wait for the train to come to me. And the train is like 10 miles down the road. You got patience and time. Time is an extremely difficult concept to grasp. Meditation in this regard is a big deal. You don't have to be the traditional meditator where you sit there and own, but you just realize the concept of time is an important thing to grasp. And you're able to clear your mind, you're able to relax, you're able to wait, express patience, and know that the appropriate thing to do is to understand where we are and where things are heading. Where we are is austerity. Be grateful for the amount of cash you have and don't lose it. Protect your shit and don't necessarily spend it all. Be frugal. And why is that? Because when the period of exuberance returns in 1, 2, 3, 4, 5, 10 years, you need cash. Otherwise, you're not going to make money, because working isn't going to get you to where you want to be. The only way to uh, uh, have upward mobility, as they say, is to reasonably allocate capital and investments. And the easiest way to make nice money is to deploy capital that you have saved and retained and protected during periods of austerity, and deploy it during periods of prosperity when there's growth, when there's liquidity that's flowing through the system and expanding by double entry accounting standards. And that's not where we are. The most important thing to grasp is where we are. And if you try and make things behave not like they are, that's how you fuck up. That's how you make a mistake. So you can look back in hindsight and say the decisions you made were good or bad, and that's important to do. It's important to assess what you have done such that you can do better. We can always do better. You shouldn't dwell on things you've done, but you need to learn from them. It's obviously a large intro, but we'll pop it over to the main screen in a minute. Um, so there is fair. What is the appropriate thing to do in this kind of market? You have to assess what is real and what is not, and that's something we've been doing for the last 2 years, and that's called peering through the madness. And that's something that in hindsight, what should I probably have done is not necessarily peer through the madness. During a period of exuberance, you could have complete garbage that was making multiples. And I was the rational actor. The rational actor will underperform during periods of irrationality because nothing is going to go according to shit that makes sense. And that's something I must learn from during future cycles of, of liquidity flow. Um, Albeit maybe I won't, because I take great pride in my capacity to express myself rationally and reasonably and stick to my narrative. And guess what? Guess what? Clearly, I underperformed during our most recent bout of exuberance. Um, but and there's plenty of perspective to have on my degree of performance, which was extraordinary relative to standard working or any other standards for that matter in the stock market. There's no way I would have made the kinds of multiples that were made in stocks. It just doesn't happen. So I won't knock on my degree of performance, but I underperformed relative to what I could have done if I truly embraced the exuberance. So, in hindsight, you know, maybe I'm exposed to more of the exuberant activity in the future. It's clearly not now. But the core of my thesis gives me great pride to remain rational during periods of exuberance. And the whole point and strategy that I deploy is traditional dividend investing, value investing methodology, passive income, and that's sustainable. That's the most important thing. I do not need to have eyes on the market, and I have an expectation of cash flow at the end of the week. That's crazy. You're not doing that in traditional finance unless you got 10 million plus. If you're getting 4% of the money with 10-year bonds, great. You have 10 million, you're making 400 grand a year. That's lovely. Maybe you have 5 million, you're making 200 grand a year. That's cool. That's great. The fuck's running around with 5, $10 million? Certainly not the majority. Plenty of us during periods of exuberance, sure, we had that, but that was not something that was retained. The exuberance has deflated. So I take that into consideration for the next cycles, that cycles end and bonds are a risk-free cash flow. It was a bit unprecedented because rates were zero. And no one in their wildest dreams imagined we'd see 5% on 1 year bonds and 4% on 10-year bonds ever so briefly. It was just thought that everything would implode and yields would literally be pinned at zero, or dare we say, go negative. Um, so this is, as often is the case, this is unprecedented territory. Who would have thought in December of 21 you sell a large part of your capital and buy 10-year bonds? They would be, and they, well, bear in mind, so when you buy a bond, the coupon is inversely proportional to price point. So if you bought your bonds in December 21, you get jack shit on your money, literally jack shit on your money, and you would have lost, no, yeah, you would have lost a significant amount of face value as the yields crept up to 4%. You would have lost an absolute fucking fortune. So you couldn't just risk off into bonds in December of 21. Nobody would have played that. There is not a single person in the entire crypto space that sold their cash in December of 21, sold their assets for cash in December 21, saying, oh, yeah, when the bond yields go to 4%, 5%, I'm going to buy bonds. Nobody did that. There's no possible way because nobody in their right mind would have expected that to occur. That is a tremendous drawdown on face value to get the 4 or 5% from 0%. 20%, 30% on the money. Ay, ay, ay. So we could safely assume we're probably in store for more unprecedented activity. I mean, we still have a correlation between equities risk and the bond market. We have not seen a return to true risk off, where bond yields literally collapse and they're going down as the stock market's going down. We have a correlation. Bond yields are relatively stable for the short term, recent last couple of weeks, and equities are too hovering. It's kind of like we're at that metaphorical crossroads. So, topics of conversation that I talk about. Where are we heading? Oh, this is lithium. So I talk about. I got the chart up. I don't want to digress too much. You guys want crypto, but from a 2030 standpoint, domestic lithium production is going to be a big deal. Well, domestic lithium, cobalt, nickel, and graphite. Graphite's been a sleeper. That graphite killed me back in 2016. God damn it, so early, almost indistinguishable between being early and wrong. But graphite should make a significant resurgence. It's a critical component to modern day batteries. Anyway, but this is very long term, and you just got to sit on this shit. Just got to sit and wait. Um, we're heading into a world where I would say, fluff is eliminated. Like a supernova explosion, the outer layers are just completely just blown away. And we could be in a very tight liquidity environment for a fair amount of time, and we do not know. We do not know how they respond to the next liquidity crisis. We do not know what kind of intervention is offered that it would significantly increase systemic liquidity. Clearly, they're coming off the heels of 2020, which induced this recent market activity, which is probably something they're not going to want to do again. So my base case is that what we experienced in 2020 does not occur to the same degree. And Druckenmiller says that we're going to have 10 years of absolutely bullshit. They're not going to do anything, and it's going to be a relatively restricted liquidity environment with moderate rates, and they do what they can to stabilize the market and keep the rates high, restricted territory. So we can have a fair amount of boringness, which reinforces, patience and time, where you're not doing anything. And the most important thing is cash flow, which clearly we could work. And I'm pretty sure everyone that listens to me had capital to allocate to investments. Could they work? And you still work, and you have a career. And if you don't, that's another topic of conversation, where education and you build a career. But the reason we're here is upward mobility. And what have we done over the last 2 years? The vast majority of persons that listen to me have a pretty meaningful passive income stream from digital enterprise. And we're at a point in time, where are we, where what's the most meaningful digital enterprise? It's the digital enterprise that has the attribute of survivability. And what is the most critical attribute of survivability? Um, is immutability, because it will exist into the future. It will be there during the next period of plentiful, bountiful liquidity. It's guaranteed mathematically to survive. It will survive. It's going to survive. So that's the cure to time. A lot of people don't see things the way I do. And I often say that what is the most meaningful innovation in the crypto space is that's illiquid time locks. And clearly that's contrarian. You deploy capital to a U.S. bond, the cash is locked for a period of time, but the bond is liquid, which is comparable to a tokenized deposit. It's like 8 tokens on Aave or whatever the hell is collateralizable. Um, it's still sellable. It's a deposit that's liquidatable, not just redeemable. So the biggest innovation, I would say, is a non-liquid time lock deposit. It's not a CD. You could claim a damn CD from a bank whenever you want. And funnily enough, What is the very well known time lock deposit that is not claimable uh, prematurely? Happens to be hex. So, you know, aside from all the drama and all the uh, all the shit that goes on social media and all the hype and all the bullshit, that concept was deployed back in late 2019. Good old Richard Hart. All right, fine. Um, so a lot of my thesis does go back to what was done back then by him. Oh dear. Am I really saying this? Um, I think there's more significant enterprise because that's not an enterprise. That is a just a cyclical time lock contract fueled by um, a user base that I don't have interest in. It's fueled by hopes and dreams, and I have no fucking interest in hopes and dreams. I have interest in enterprise that offers a service and a product where there's actually people consuming the product in order to do things, and I want a piece of that action. So conceptually, there's nothing there for me in that particular community at all. There's no miracle. There's no magic. There's no, and the worst thing you want for a protocol is a hero. The hero needs to be the software. It needs to be immutable software that is deterministic. That it will execute no matter what, as programmed, as coded every single time, over and over, deterministically. That's some shit right there. That is innovation. And that's what Bitcoin offered with its deterministic monetary policy. And folks would argue that Ethereum, they'll change. No, it doesn't work like that. They're not changing. There has to be some degree of consensus. And clearly, Bitcoin has the predominant capacity to resist change. I mean, look at how much it has resisted change with all the forks in 2017. So that's significant. That's meaningful. But the deterministic nature of its monetary policy, it's not that it was short-sighted. It's an extraordinary innovation and offering. But in the context of what we have today with smart contracts and the EVM, it comes up short compared to what can be built. The potential for systems and the services and products that can be offered of a deterministic nature. That's the greatest innovation. Deterministic, immutable software. No human can make a change, period. That's extraordinary. That changes everything. So curve looks like shit. Zoom out to the monthly. When you get a double bottom, your support is a position of weakness. I don't deploy capital in weakness. I deploy capital in their strength. A resistance flip support with the trifecta of confluence with the higher high or an ascending triangle where there's actually liquidity in the system and volume. This is not a time to deploy capital. Persons will be like, sure, the price is down, max opportunity time. Yeah, great. That's contradictory to the argument I present. This is a period of austerity. Liquidity is absent, and be grateful for the amount of capital you have. So, the contrarian in me will stick to that rationale. Fight the temptation to think that this is a period of opportunity because that's when the most pain occurs. It's irrelevant if this is a max opportunity price point. What's pertinent is the macro situation that is prepared to take a sledgehammer to your nuts. Uh, yeah, being graphic and all, but is that not the case? Do we see what's going on with used car loans and mortgage rates? Come on. And the reverse repos and the treasury market. I mean, the whole system is prepared to take a sledgehammer to the nuts. I don't trust a goddamn thing, and I don't trust a goddamn person. What I trust is at the end of the week, can I pay my bills and do I have capital coming in so I could actually make plans and decisions about things that I do for myself and my family? Do I buy more or do I buy less? Can I afford this? Can I not afford that? And you can't do shit unless you got some cash in the bank and unless you have income coming in at the end of the week so that you have a sense of how much future cash you will be exposed to. That is how you make plans. That is how you prepare. That's how you make choices and decisions. That's the deal. 35 people in the stream, 10 likes. We can do better. Who's in the stream today? Taps, he's in the house. No horns, no tail. I've been reading up on Tapioca Dow. Interesting stuff. Yeah. Um, Clearly, this is not a market for risk, but I'm very impressed with the things that the team says. I'm very impressed with the things the team has written. I'm very impressed with the protocol's documentation. I'm very curious to see to the degree it is deployed with regard to immutability, upgradability, or absence thereof. I am very excited for a cross-chain world of collateralization and stablecoins and liquidity flow and so on and so forth, and credit offerings and collateralized debt positions and all the phrases that we talk about. So I'm quite interested there. So uh, that we'll see. The protocol will launch. We will see how it performs. We will see how it behaves. We'll see how it operates. We'll see who's interested in it. We'll see the functions and products, stablecoins, and services that it will offer. We will play with them. We will test it. And that is what I'm looking forward to. I'm looking forward to experimentation with various things that crypto is offering because the bear market is for building, and they are indeed building. There's a lot of things that are being built that I am excited about. As much as we could see portfolio valuations be actually absolutely decimated, as irrespective of the capacity for this ecosystem uh, to iterate technologically. And boy, oh boy, are they iterating. There's so much that's been learned over the last 2 years. And, and man, it's just such a red herring, all the shit that goes on with the exchanges and all the opinions of regulators and persons claiming to be technologists with regard to crypto. Fuck crypto. A fucking stupid word. Peer through the goddamn madness, see the shit, the real shit, the deterministic software that is executing and is deployed immutably. That's some shit. I don't need any fucking politician or any technologist to tell me what I see clear as day. The innovation staring at me right in the goddamn eyes, which also means I see all the bullshit, all the mid-level, yeah, junior level engineers that think that they could crank some shit out, write some Solidity or Viper, and write some protocol that looks like it's meaningful, but they're missing the point. The point of this space isn't just entrepreneurship and VC and making a business. The point of this space, the crypto space, is how the fuck it's built. If it's not built immutably, they're fucking missing the opportunity. They're missing the biggest innovation. Get humans out of the equation. No admin rights, no super user control, no upgradability. That's the problem. The people are the problem. Humans are the problem. That's the problem with corporate America. That's the problem with the equities market. It's people, it's boards, it's executives, it's all the fluff and bullshit of traditional corporate America and HR and managers. Uh, Trust. Why is there a manager? Because I don't trust the people. I'm tired of trust. And that's what I see in the crypto markets, and that's where we're heading. People will see that the best opportunity is trustlessness because people suck. You know what doesn't suck? Software that's deterministic and guaranteed to do exactly what it was told to do. And what it was told to do was programmed, sure, by a person, but that's irrelevant because once it's deployed, the person has no business with the execution of the code. It will do what it was told to do. That's some shit. That's peering through the madness. Critical mass, kill us, peas in the house of pleasure. Ron Sco- my man, I'm sure you get this a lot. Skipansky, boom, I'm good. Rupert, what's up, Captain? Primo, hey, brother, thanks for staying in the space. Are there projects you will look to buy once you think? No, I have no interest in buying anything right now, and I am very assertively restraining myself, and I'm grateful for having done what I've done. I'm grateful for having been through what I've been through, and I'm grateful for the capacity to say that I could buy my family dinner tonight and probably get a vacation in and pay for my daughter's school, and I'm grateful for the amount of cash that we have. This is time for humble. This is time to take the frickin' foot off the gas pedal, and this is time to not look for opportunity. It's time to research and understand, which can, I guess, be interpreted as potentially finding an opportunity. This is time to be fearful of liquidity conditions. You want to know when it's time to deploy. It's when the damn liquidity is going up, not at 1.5% reduction in the 7-day period. Come on. The state of macroeconomics is hanging on by a thread. Pushed back above the TWAP. I don't know the significance of the TWAP on this particular spread chart, but shit, clearly it's been drained significantly. This is Arthur's should be famous federal government liquidity meter. I find it quite interesting that the system is under significant pressure, both at 21%, give or take. Anyway, um, sticking to BTC and ETH at that time? No, I don't own any BTC and I don't own any ETH. I have no interest in exposure to volatility. I have interest in outperforming, and I have interest in further upward mobility. And to do that, it's not savings. Bitcoin has argued as the savings vehicle, and Ethereum, probably a better savings vehicle, considering the monetary policy and its deflation. Bitcoin is inflationary. Bitcoin is disinflationary. I'll give it that. It's disinflationary over very long periods of time. But damn it, Ethereum is deflationary and experienced a complete disinflationary collapse. Collapse! This is extraordinary. Even if inflation was zero, it's at minus 5,800. That's crazy. This is a wild monetary policy. The only thing that comes close to this is the US dollar for deflation in 2022. So, there's things that I think about with regard to ETH, but really, what is the thing that offers upward mobility? It's enterprise, it's products and services. And how do you tap into that? What is the token offering, which is share offerings? Um, and how is that crafted? And what access to cash flow does it offer? And that's enterprise. So we are dividend investors of the crypto space. We are the traditional value investors. We look for value where it should be, where it will be, and that is where we're heading. And where will value be? Where the liquidity is. And why will the liquidity be there? Because humans are taken out of the picture. And when humans are taken out of the picture, everyone's like, oh, less risk. So this system right now is in the process of de-risking itself because people are slowly realizing that these pieces of software are immutable and they have deployed and they will execute deterministically without a damn human, without a board voting on dividend rates and dividend hikes and capex and spending. No, the contracts tell you exactly how much money was made this week and how much money you're going to get this week. Not accountants, not a human interpreting data and metrics. That's the deal. Trevor Van Meter still hanging in there. Quick drop in from the office. Hope you're doing well. Back to writing more Java code. Yeah, man, I'm a Kotlin guy myself, so keep doing what you're doing. Java going nowhere. So just very nice to be indispensable in this world that is going to be driven more and more by software. So good stuff, brother. Dan, a pleasure. Kill us. Protect your issues, right? That's where we are right now. I'm literally on a stream right now telling you guys, don't, there's nothing to fucking invest in. You're lucky to have the cash. You're lucky to have the cash you have. Be grateful, be humble, and serenity now this shit. That's the deal. Convex and Arbitrum with sentiment is exciting stuff. Very well, very much so. It's a very meaningful protocol that did what it did for Curve, and I would say, Curve would have gotten to where it is now with regard to you know the the cure to the hyperinflation. But this was seen. This is the way it was coded and built. But convex is what amplified it, and what other protocols are working on is trying to bypass the need for the secondary layer with the convex, what it did for curve, and it sped up the disinflation. Um, and obviously Oren Bao has done well in that regard, but I think there's going to be better. I think the I think what Tapioca is doing with its options is a big deal because there's really only one other protocol in the entire crypto space that did that, and that's Fix Forex. And Fix Forex is still a big deal. Everyone hates on Andre. I lost hundreds of grand because of it myself. But that code's immutable. That's the one thing he always talks about is immutable code and test and prod, which fucks everyone over. But that's another story. So what should launch? Solidly should launch. What did Fix Forex need? Solidly. Where does it belong? On mainnet. So you want shit to be excited about. It's the stuff that no one looks at. It's the stuff that everyone dismisses and peering through the bullshit. Peering through the madness. There's a lot of things to be excited about, or at least interested in. Fran Corb, thank you for your contribution. Much appreciated. It's a pleasure. Primal wisdom. Wouldn't it be rational to act irrational, temporary, in a rational system? Oh my goodness. All right, fine. Yes. Yes. But now's not the time. This is not currently a state of exuberance. So, yes, I would very much agree with your sentiment, especially me thinking in hindsight. It is rational to behave irrationally during the next period of irrational exuberance. Yeah, when everything's ripping 10x's, sure. Will it look like it did in 2020? Probably not, but I think there's going to be some interesting irrational opportunity that will be rationally executed with the rational expectation to return to a rational operating procedure at some point in the future after the fact. My man, well said. Crypto Jacob Pleasure, Sir Joe. One curious view. Ooh, some good comments today. I'm reframing my thinking on staked ETH. I now consider it a purchase. I bought a percent of the future supply as we peak supply. It's not necessarily peak supply because that's dependent on network load. If the network load continues, you're looking at peak supply. If we have over 15 gwei on gas fees, you're not going to have more supply. That's the bottom line. So I appreciate what you're saying. And I would like that as well, to have a node. The thing that disappoints me is that the node is liquidatable. In the future, you could withdraw the money from the node deposit when the network is upgraded. And at this point, it's still, what you got liquid staking options and it's liquidatable. So this comes back to just me, and what I focus on is a non liquidatable purchase. I can't deal with that emotion, one curious view. The capacity to just think of it as a purchase. I don't have that capacity. Maybe I'll find it in the future. I'm not a hodler. I don't understand that mentality. unless you have millions and millions of dollars. How could you watch, Bitcoin rip 3,000 to 60,000, 20x on your money? If you put in $10,000 and you watched it go to $200,000 and you watched the $200,000 go back to $50,000. How the No, I don't understand the mentality. And if you did it with $100,000 and you watched it go to $2 million and back to what, three, four, $500,000. I don't understand the mentality of the hodl. If you can liquidate something, liquidate the shit out of it. And it's something I've said. If it can be sold, it will be sold. Everyone that can sell something will sell it at some point under some circumstance. You're hungry and you need the money, you're going to sell anything you could find. So I appreciate what you're saying. I consider a liquidatable position a burden, emotional burden. But once again, agree with what you're saying, and I appreciate it. I wish there was a permanently locked node. That's what I wish. Vibs, sup, hey, hey, stream fam, 42 people in the stream, 18 likes. We did a little bit better. Come on, boys and girls. Michael, hey, Noah, Quantified, cheers, Cap, Crypto Jake, Cap, Gundy had March 2023, up or down? Horizontal. I think maybe down and then back up horizontal. We get because I think if we have a systemic issue in traditional finance, I don't think they print it to oblivion. I think that they think they're smart enough to stabilize things, and I think they have more tools, particularly the reverse repos, that have a capacity to force the commercial banks to basically buy the entire short end of the bond curve, of the yield curve. So I think they have some additional tools in their repertoire. And I think we could have a significant dip and then a stabilization. So I would say horizontal. I say we're going to have a freaking boring ass market for quite a while. I don't see any exuberance on the horizon because I see them fearing that because of what they did. I see them having tools to stabilize things. That's what I would say. Horizontal crypto, Jake. Um, Killis, yay. Vasco, I am DCAing CVX and FXS. I will patiently wait for the next bull run and do a 10x. These are reasonable statements. The time horizon is a consideration. Next bull run can be a long time coming. I like those assets. I think they are meaningful. Um, Holding is a complexity, as I said, an emotional burden. But everyone has to go through their own trials and tribulations and how they manage their capital. So that's my overall sentiment for what you said. Good stuff. Dan, are you researching anything else interesting along with tapioca? Well, yeah, you know who posts a lot of the stuff that I appreciate is Crypto Condom. What is it? Is this the condom? Everyone knows the condom. He does the extent of finding the new shit that I find interesting. Um, my bookmarks got all messed up, I think. But I bookmark everything that I find. Let me go to the people that I follow. Um, I like the llamas. Morpho's interesting that I was looking at. Stakewise is on the radar. Gamma Swap Dan's interesting. Um, Dexible's interesting. Twapping, so that offers some interesting software. Uh, uh, This is tapioca. IPOR is interesting. Interest rate derivatives, very interesting what IPOR is doing. Fire is something to use. I haven't used it, but it's interesting. Arrakis, that's boring as fuck. So I'm just going to unfollow them. Sorry. Thales is interesting. Hero is still interesting on Solana, but that's a freaking hot mess. But Thales is on Optimism, so that's interesting. I think the price point has done decently as well. Let's take a look at Thales. 30 cents, not bad. It's down 40, 50%. It's done better than many things. Not bad. Pretty good. So Thales is interesting. Hero right behind them. So credit scores. That's interesting stuff. Um, that's about it. This going back. Now we're going back in time. But I think the gamma swap is very interesting. Um, gamma swap. That's about it. The most interesting thing from a protocol standpoint is tapioca. I've been talking and thinking about like an aura position, but man, that big whale at balancer just is so disappointing. I mean, I don't want exposure to that. But what if aura pivots? Do you take a risk in this environment? I mean, aura looks very interesting. And it's productive. It's what, 60, 70% of the money? It's very productive. If you go on the llama, you see aura's cranking out what, 6.26 cents. That's wonderful. Yeah, 6.26 cents per. So that's cool. It's 2.05. I don't know. I don't like Humpty. I don't I you know you, people could There's plenty of people that have that as a primary position or a balancer exposure, and but that's what they've been in. That's their a primary investment. That's cool, and it's great, and we all take risks. I got plenty of risk on the table. I just I'm not prepared to take on that additional risk. One, it's not a lock in perpetuity, so I have that knowledge that I can liquidate it, which means I'm looking at the frickin' price, um, and that's not something I want to take on. I get tempted because it produces significant weekly cash flow if I took the position size that I set on the forum. But I'm just not prepared for that right now. Tempted, and I am resisting effectively. Alejo, and I understand how you mean Eth monetary policy is better than BTC, but what about the previous existing supply of Ethereum? Okay, so it has a total supply. That's okay. We have a market cap right now, and there's a total supply. It's irrelevant what the previous supply is. What's most important is monetary policy and governing its future supply. Behavior and activity is based on rates of change and expectations of future state. So as of right now, there's this many. And there was this many 2 months ago. That's crazy. That is a massive, massive change. That is a hyper disinflationary collapse. That's a big deal. D Beer's in the house. D Deer. Blockmates is in the house. A pleasure. Yeah, Tapioca's from a architectural, conceptual design standpoint is probably the most interesting thing I've seen in quite some time. It literally is iterative by definition. It takes the best concepts of what have been built thus far and merges them into um, a structural derivative protocol. Um, that's very meaningful. So I look forward to hopefully a seamless launch. And what I know is that seamless launches are possible. Look at what Aave does. Look what Curves does. Look what Uniswap does. Look what, frankly, Balancer and Aura's worked out quite well. And these protocols deployed their contracts and did not have systemic issue. The protocols worked. That's that's crazy when that happens. And clearly we've seen protocols fuck up. We've seen so many security breaches. But what we do know is that it can be done right and things can go off without a hitch. And things do work. And when it does, it's really a beautiful thing. Well, I'm not fond of like change the game. That clearly is dependent on consumption and adoption, and that has a time component. So the extent of what I know is that I'm impressed with the words used by developers. I'm impressed with the words used in their writing and their documentation. So probably the assessment that I have right now is that I am impressed. For what it's worth, that's rare. I bet on the peg of Frax on Y2K. Assume hope it maintains peg. People will lose interest in Y2K if there aren't depeggings, black swans. Yeah, we'll see how things play out with regard to stablecoins. The regulators, I think, I think the regulators, they have no idea what to do. And I think it's going to be interesting what plays out with FTX because I think in the end we all knew where it started that there was a massive opportunity in the crypto space that we saw from a retail perspective, and I think they see that also from a government and perspective, especially the politicians see that, and the politicians clearly converse with regulators. So whatever we're going to see, it's going to be interesting. And the first thing I want to do is be in the front row seat when interesting shit happens. I've Crypto Jake, Dan, Gamma Swap, interesting. Yes, indeed. Of course I like the llama. Of course I like the llamas. I don't think Heroes moving off Solana. We'll see what plays out in that regard. It is what it is. Blocky is here. LFG. Blockmates is in the house. It's always a pleasure. Dan, any opinions on Xmon SudoSwap? Yeah, outside my interest zone. We'll see what Uniswap does with their NFT support. Um, NFTs is a big deal. A lot of money to be lost in NFTs. Conceptually, technologically, it's a big deal because it's a way to immutably write metadata, or mutably, depending on how it's crafted. But it's not fungible, which is significant. So it has a capacity to represent a single instrument or a single entity or a single tangible item. So NFTs are significant. And we clearly see that playing out with not collectibles, but collectible card games where there's utility. And that's something that for me, I observe for my preferred collectible card game, which is Gods Unchained. These are magic cards. They are. It's what it is. And there's a great deal of scarcity, and clearly there's utility because you're playing a damn card game. So I don't need anyone to tell me that NFTs are bullshit because I'm playing the damn game, and they're NFTs, and I could sell them on markets, and I could buy them on markets, and there's certain things that I want to buy that just aren't there because other people have bought them. So I don't need anyone in mainstream to tell me what I know about NFTs, but I also know there's a lot of bullshit PFPs. Most of them are bullshit. Hype and exuberance. Fuck that shit. I don't got time for that shit. I got time to make the right choices, the rational choices. Thanks for a great stream, Voice of Rationality. Let's all keep the sledgehammer away from our nuts. Well said. Enjoy the weekend. Thank you all for joining me Friday, November 18th at 12:19 p.m. 39 people in the stream, 22 likes. We can do better. Tell everyone to subscribe. If no one listens to me, I can't help anyone, and I like to help people. I wish you all a wonderful weekend. Stay safe. After party on Discord for the most rational community in the entire crypto space. I will see you all on Monday. Peace.